Hello, everybody. Good afternoon. I'm Chloe, and I'm the CEO of VouchSafe. I'm joined here today by my co-founder and our CTO, Jay. And today we're going to talk about the government's new digital ID and digital verification rules, and most importantly, what they mean for how we will verify and onboard new customers in the months to come. So VouchSafe, a little bit about us. We're a trust and counter-fraud platform used by businesses of all different sizes to stop fraud and stay compliant. It allows users to provide things about themselves with, it allows users to prove things about themselves with a very, very wide range of evidence. And that includes digital IDs they already have, but they can do it in an intuitive and accessible way. That means that it's both safer and easier than the traditional onboarding where people take photos of their ID. From our very, very early days, we worked closely with the Scottish Government and OFDIA, which is the Office of Digital Identity and Attributes, to conceive and build and advocate for new ways of verifying identity that are innovative but also compliant. And that's necessary because identity verification has been a problem, especially in the public sector, for decades. The drive to take government services digital that started about 15 years ago when the old DirectGov site was replaced with gov.uk has ultimately kept hitting the same roadblock. In order to access these services, often the government needs to know who you are. They've tried multiple things and they ended up with Government Gateway, which is that really, really long number that's linked to your national insurance number, and then Gov Verify, which was like famously a catastrophic failure. The old Verify service had a success rate of 48%. And to go into that success rate a bit more, so it took into account how many people could successfully verify themselves to a third party after they'd gone through the whole journey. So what it didn't consider is things like the number of people who dropped out before they even finished the application, simply because they didn't have the right evidence. But it wasn't inherently the technology that was a problem. It was an issue with policy and political factors. There was no playbook for how to accept alternative methods of verification, and the ability to do so was literally designed out of previous iterations of services like universal credit or the ones that HMRC provide. It was ultimately, Verify was ultimately failing because the methods of verification didn't reflect what people actually have. So it needed to go beyond a passport and a credit check, and therefore it had a really, really low success rate. But now that playbook does exist, and it's vouching. The public sector, they can't do anything unless they can guarantee that it will work for everybody. So our initial focus was vouching. It was where we started, and it's a method that even without realizing you'll be familiar with. So it's a way of accepting alternative evidences that come with the assurance of another person. So think about when you get someone to co-sign your passport, or when you would apply for a bank account with a signed letter, say from your employer or from a GP. It's the same thing. We worked with the Scottish Government for about 18 months to scope out what an actually inclusive verification process would look like. So how could we enable people to gain access to services they desperately need with the evidence that they actually have available to them? The moves the government are now making to make identity verification more inclusive are in a large part based on the research and the work that VouchSafe has done and shared. And the latest version of the framework has updated guidance on vouching and has come directly from our work. So what actually is the framework? The Digital Verification Services Trust Framework, snappily named, is published by the UK government, and it's essentially a list of rules that digital verification services have to be audited against to be certified as a trustworthy verifier. So it's basically our version of the FCA. Any service that enables people to digitally prove who they are, where they live, or their eligibility to do something is a DVS provider, digital verification service provider. It covers security, transparency, inclusivity, interoperability, and governance. And it's built to help individuals use and reuse digital verification and identity with and between organizations. You can see who has been audited to the framework on the public register. There's recently just been a large re-audit of all digital verification services. And it was previously called the Digital Identity Attributes and Trust Framework. And it had versions beta, alpha, beta, gamma. This is version 1, and it's had a minor rebrand. But there are a number of differences between all the versions. But the main one that impacts all of you is that the framework is now law since the Data Use and Access Act, meaning that financial services are now classed as relying parties and have to pay attention to it. Essentially, in version 1, we are seeing more commitment from the government to regulate identity in any sector where it needs to be verified, where before it was only where identity needed to be verified for proving eligibility for things regulated by legislation from the Home Office or for disclosure and barring services. This move shows that other sectors will now have to use providers who are regulated by the government. It also comes with supplementary codes. So for types of identity check that are really tightly regulated by the government, right to work, right to rent, disclosure and barring service checks, DBS. How it relates to financial services, though, is through a change in the way the money laundering regulations and the DVS trust framework interact. So the Treasury announced a couple of months ago that firms can fulfill their obligations under Regulation 28 of the money laundering regs by verifying a customer's identity using a verifier on the trust framework. And that can also works when you're verifying company directors. I have now just provided you with a lot of info up top. So to summarize, what's most important for financial services is that the change is that verifiers who aren't certified to this framework and therefore not on the public DVS register are no longer deemed reliably compliant with the money laundering regulations. It also relates to the gov.uk one login and wallet and upcoming digital IDs, like mobile driving licenses that are currently in pilot. So any verifiers who want to be able to accept government issued digital evidence absolutely have to be certified to the DVS framework. As well as feeding into financial services, this also feeds into the Online Safety Act and recent Tobacco and Vapes Act. And in order to accept any government issued evidence for any purpose, that verifier has got to be certified. Prior to the new guidance, they didn't have to be, but now they absolutely do. Okay, so who needs to follow it? Well, basically all of us, but obviously mostly the weight's on us as the verifiers. We have to prove that we're secure and transparent and that we can safely accept all of the types of evidence that we do, but also relying parties. So relying parties have an obligation to make sure that the verifier they are using is certified. Relying parties basically used to just be anyone doing a right to work, right to rent, or DBS check, but now it has expanded to financial services. So that's a lot about the context. I'm now going to hand over to Jay, who's going to explain how the framework actually works.
Yes, hello everyone. All right, so let's talk about the actual mechanics of the framework and the rules that it contains. First of all, let's take a look at a high level at how companies are certified to the framework. So this is all based on conformity assessment bodies, CABs, like BSI, for example, which are accredited to that role jointly by UCAS and the Department for Science, Innovation and Technology. A company that wants to certify their services to the framework so that they can do digital right to work checks, for example, arranges an audit from one of these CABs. And if they can prove that they're following all the framework rules, they get a certificate and they get a listing on the register. There's 5 roles that you can be certified to. The most popular one is an identity service provider, or an IDSP. These are the services that verify identity in the way that you normally think of. Vouchsafe is one of these. There's also attribute service providers that might just share parts or attributes of a verified identity, like a name or a date of birth. There's holder service providers, essentially the digital wallets that can hold identities and attributes. Orchestration service providers that plug together other roles. And finally, component service providers, which might just do a part of an overall identity verification, like providing the biometric or the document validation technology. Now, these roles are all pretty similar today, and no matter what role you're certified to, about 95% of the framework rules are the same. But this is likely to become less true over time as the sector grows and these roles start to differentiate from each other. And on the topic of those rules, the trust framework itself relies on a few different pre-existing bits of guidance originally intended for exclusive public sector use, now being adopted for the overall market to use. Namely, these are GPG 44, which is about how to protect services with authentication, and GPG 45, which contains the actual mechanics about how to verify identity. There's a lot of rules in the framework about how participants need to treat and secure data, how they respond to fraud and otherwise do business. But the real meat of it, the really interesting part, is this GPG 45 part. So that is where we will focus now. Let's start with the basics. To verify or assure someone's identity, in the language of the trust framework, you need to do 5 things, 5 checks. There's 3 checks that you always have to do. The first one is to get evidence of the claimed identity. That is their digital ID, their photo ID, maybe official records stored by an authoritative source. This is the strength check. Then you need to make sure that the evidence is real. This is the validity check. That could be checking a proof of age card with the issuer, or confirming the cryptographic signature of a mobile driving license, say. Then you need to make sure that the identity belongs, crucially, to the person who's claiming it. And this is the verification check, which we think is quite confusingly named, so you might prefer to think of it as the impersonation check. There's 2 more checks that you might also have to do. Sometimes you need to make sure that the identity has existed over a period of time, and this is the activity history check. And lastly, you will sometimes need to make sure that the identity isn't at a higher than normal risk of being stolen, and that is the identity fraud check. 5 checks. Depending on how thoroughly you do each of them, you will get a score between 0 and 4 for each of them. You can take those 5 scores, those 5 numbers, and you can fit them against a list of 30, 40 odd identity profiles, which are a set number of ways that you're allowed to add those scores together to get a confidence level. Are you with me? Identity profiles are named like this. The first letter is the confidence level. The number is the number of pieces of evidence involved, which might be 1, it might be 2, or rarely it will be 3. And each specific profile will have a letter, which is unique. Confidence levels are the same as assurance levels in European or American parlance. They essentially measure how well you're protected against identity risk. There's 4. Low, which is quite easy to achieve with background data lookups. Medium, which is what is needed for most purposes in regulated industries like ours, including things like opening a bank account, say. High, which will generally need cryptographically secured digital evidence or biometrics or both. And then very high, which is very difficult to achieve unless it's in person with specialist equipment. And it is usually, to be honest, unnecessary. Not even the Home Office visa application process needs a very high, which is saying a lot. So if we wanted to align these confidence levels with money laundering regs and FCA rules, we might say that simplified due diligence for our lowest risk products and customers should be low confidence. Standard due diligence with separate proof of identity and address should be medium confidence. And then enhanced due diligence for customers who have a raised risk level should naturally then be high. But that is not always the case because these are different frameworks developed independently, and right now they do not cleanly map onto each other. So let's put all of that together and see how it works in practice with a common onboarding scenario. This is the M1A profile. If your customer has a modern biometric passport, that's a strength 4 piece of evidence. If you can scan it and validate all the visible security features and the passport is in date, then that will get you a score 2 for validity. You don't need an activity history score for this profile. But if you check a reputable fraud database to see if the identity has ever been stolen or higher risk, then you will get a 1 for identity fraud. And biometric face matching to the document will get you a score 2 for verification, therefore M1A. Here's a more complex one. This M2C profile involves 2 pieces of evidence. It might include, say, a driving license, which you can validate the visible security features of to get that first 3 and 2. And a second weaker piece of evidence validated the same way, perhaps say a bus pass, will get you the 2-2 in the second column. Once again, we don't need an activity history check for this particular profile. You can do the same identity fraud check as last time to get that score of 1. And if we use an active liveness check that has been properly tested and certified against deepfakes and presentation attacks to do our biometric face matching, then we can raise that verification score up to a 3. Now, there's over 30 of these identity profiles, but in practice, only a small portion of the simplest ones are actually used. There are 11 million people in the UK without either a valid passport or driving license. And this month, the FCA again warned that firms don't have enough alternative ways to onboard people who don't have standard photo ID. So we are likely to see a great increase in the number of these profiles that are in regular use as more services go digital only and the trust framework itself enters widespread use. That was a lot of information. So here are the quick takeaways. Here's things that you can do this year, right? You can start doing this right now if you want. Now is the time to seek certified providers. The framework is law. The Treasury has already issued guidance saying that the digital identity tech used during onboarding should be certified. And we can expect that that wording will only get stronger over time. One of the benefits of the framework is that it allows you to reason about relative risk appetites through the language of confidence levels without getting distracted by the mechanics of the process itself. So the next step is to consider what confidence levels make sense for your products. For the vast majority, it will be medium. So use that as your starting point. And once you've done that, the next step is to map your current policies, which are probably currently expressed at quite a low level in terms of the lists of documents you accept, say, and work out what identity profiles you're already explicitly using. If you do all three of these things and document it across your business, you are miles ahead of the market, and you are essentially all set to start using the new, easier, safer digital IDs basically the second they come out.
It's also worth adding that that's something that we can definitely help with if you need it, because we know this policy like the back of our hands now. So I'm going to wrap up with a quick look at what's changed in the most recent trust framework, the version 1. There are lots of small, innocuous changes, but let's focus on two of the biggest. So the first one is that there's a new trust mark that certified companies will be able to display. This is the industry's equivalent of an ISO 27001 badge or FCA authorization wording, and it will become ubiquitous over the next few years. And secondly, the section on how to accept a vouch from a trusted referee and score it against an identity profile has been completely overhauled, due largely to our work that I told you about at the beginning. It's now much easier to treat vouching in a compliant way, and that matters not just for us in this webinar, but literally for society as a whole, because as more and more of the world gets locked behind these strict identity checks, we need to make sure that every real person has a way to pass them, whether or not they have a passport or a driving license. Over the years of doing this in the real world, and we've done that in close collaboration with industry partners and with the government, we're convinced that the solution to the access problem is vouching. And in fact, we are so convinced that we are shortly depreciating the ability to prove your identity with literally a piece of paper, like a birth certificate, because of two reasons. We found that when you offer both alternatives, users are more likely to try a document and fail, and also they succeed first time more often with a referee. And it's also much, much safer, especially with the rise of generative AI. This guy is Stafford Beer. He's a famous professor of cybernetics, was sadly, but he has a really famous quote that I'm super into, and that is that the purpose of a system is what it does. And with this most recent release of the trust framework, it's one big step closer to the system that we all need and achieving the purpose that we all need it to, not just as fraud professionals, but as members of civil society. If you want to learn more about these issues, we have published a detailed, it's called Digital ID in the UK. We published it earlier this year, and you can grab a free copy from our website. We've said pick up a printed copy. If you are near Deptford in London, you are more than welcome to come and pick up a printed copy. It's very shiny. Thank you so much. If you want to follow up, we've got our contact details here, but we also have about 10-15 minutes for questions. So yeah, let's open the floor.
I preparedly collected some in advance over email, so while you get ready, you can drop them in the chat or you can raise your hands. But I have, okay, so someone would like to understand a little bit more about how the framework operates with the gov.uk wallet app and the new mobile driving licenses, how those two things work together.
Yeah.
Shall I do that?
Yeah, you take that one.
Okay. All right, so should we go back to that slide with the big sort of sector diagram near the start?
Yeah, let me try and find it.
It's just at the end of the first section, isn't it?
There we go.
Thank you. Yeah, so this is shaping up to be a relatively complex sector, and it is a little bit circular for some of the bits where the government is themselves getting in on this digital ID stuff. So the way that it appears to be working is the government sets the scheme rules for the trust framework, and as part of their own digital identity operation as separate from that scheme, they have gov.uk one login, and that will feed into a gov.uk wallet app, and mobile driving licenses and eventually e-visas and other things will all live in this wallet. So one login was previously certified to the framework. I don't believe it currently is, but probably will again become certified at some point in the future, just to prove that one login is following the same rules as the rest of the market and everyone's playing the same game. But I'm not aware of any specific plans to certify the gov.uk wallet or the mobile driving licenses to the framework, although I think it probably would make sense ultimately for the wallet to be certified as a holder provider, one of the roles that we talked about earlier. And of course, the other aspect of it is that you have to be certified to the framework if you want to validate these credentials. So downstream of that, the certification is super important. All right, a question from Jen. What are the, say, top 3 sectors over and above finance you think will need to pay more attention to this?
I reckon we could answer this one together, but the first one that comes into my brain is obviously, I mean, it's cross-sector, but it's anybody selling anything that's age restricted. So that kind of falls into 2 categories. So that's the Online Safety Act. So anybody who has content that is age regulated, or well, needs age assurance and is now regulated by Ofcom and by that policy. So, gambling and social media eventually, I should imagine, they will need to pay attention to it, definitely. And then anybody who's selling anything tobacco related online. So I think, and vapes is a big one for online retailers, and also in-person retailers who are selling tobacco. The new act means that anybody who's born on or after the 1st of January 2009 cannot ever buy tobacco, and that's a whole new challenge, because we've never had that before in the UK. We've never had where if you age into being able to access a product or a service, there will be a section of society that will literally never age into that, even though the service remains age restricted. So it's that, I think, yeah, people selling tobacco, people selling vapes, and online services that have age restricted content.
And I think that the tobacco ban is particularly interesting because we were talking about this last week. We've just put a blog out about this topic. It's different to all the other kinds of age assurance that we've been doing up to this point, because every other kind of age assurance is about, are you well over or well under that magic threshold of 18? And if you're close to that age, then we'll try and verify your age with like facial age estimation, and if that fails, then we'll ask for a photo ID or a digital ID, something, and do like hard verification on you. With this tobacco ban, we're now in a situation where that ain't going to work anymore, because we've got all these biometric models trained to work out if someone looks well over or well under 18. And when you have an age that's changing over time, that I think that model strains credulity a little bit. So I think over the next 5-10 years, we're going to see a lot more interest in using digital credentials in age verification and age assurance specifically, because the facial age estimation is not going to be able to measure up.
It's not going to be able to tell if
thing.
someone's 31 or 32 in whatever year that will be.
It's a much harder technical task, and it still has a role, of course, but I just think it stirs the pot a little bit and pushes things in favour of needing digital credentials there a little bit more. As well as all sorts of like professional services, like accountants and law firms. And
yeah, of course.
Anyone who needs to follow the money laundering rules, basically.
Yeah.
All right, should we do another one that came in earlier?
Yeah.
How about what's the audit process and what is being audited like?
It's a lot. Yeah, it's like any audit that any of us have been through, I expect. So we there's essentially an absolutely massive spreadsheet that we fill in, and that includes, we have to put all of our processes in there, our internal governance, our internal management, and then also everything that we all the technology that we use, the data sources that we pull on, how we calculate risk, everything has to be documented and shared with the auditor, and we have to select which profiles that we want to be audited against, and then also if we want to be audited to do government regulated checks in the case of right to work, right to rent, DBS. So that takes a long time. We've just been re-audited at the end of March, which is, if you go on the DBS register, you'll notice that, well, you probably won't because you're not all nerds like we are in this space, but there are considerably fewer on that register than there were at the beginning of February or beginning of March because of the re-auditing process. All of us had to be re-audited by the end of March. So that was, an intense process. But to be honest, I think because we've been at the forefront of pushing for accessibility and advocating for more innovative and different ways to verify identity, we've always had to keep very, very good documentation about what we're doing. So for us, it was, it's stretching, but it's really good. I'm really proud of how the team did, actually.
Right, I've got one more, and then I think we might leave it there. So I've got one more, and it's about allowances for verifying things beyond just identity. So I think a really common question that people have around this is, okay, identity, age, sure, but when I'm providing someone a service, there's actually a lot more that I need to check. And a lot of this technology at first glance appears to be very transferable to other kinds of eligibility. So in our sector, we work a lot with people, might have been care experienced or might have disabilities, and I'm seeing an increasing amount of interest from people who are active in these sectors being like, okay, is there anything here that's relevant to this use case? So I think the answer is, sorry, I butchered the question a bit there, but I think the answer is yes, eventually. The technology of issuing verified credentials and validating them and making sure that credential is genuine, this framework creates a very transferable set of rules that can indeed be used to do that. But the initial assurance process that creates the credentials, it does, of course, pay lip service to various attributes. So, age, address, nationality, biometrics, name, date, like whatever. But there is not much to follow by way of rules for verifying things beyond the stuff that you normally think of when you think of identity. So that's a gap that I think remains to be filled. But if there is an existing way to assure that can perhaps be bolted onto the framework in future, I think it's a no-brainer that we could eventually see people carrying, digital versions of blue badges that have come through some sort of standardized assurance process that are validated by the same technical standards as like a mobile driving license. I think that will certainly come, but as to when, I'm not quite sure. And I think I'd be curious to hear what other people think of that.
Okay, thanks, Jen. Thank you everybody for coming. Have really lovely afternoons, and yeah, talk soon.